Hey everyone, welcome to another episode. I'm your host Stephen Nazon, and today we're going to be talking about excellent cash flow and one of my duplex properties. What is cash flow? Cash flow is the net amount of money you have left after you pay your mortgage and any applicable bills such as a water bill or if you have any service contracts on the major appliances at the property. I purchased my second investment property Memorial Day weekend of 2016. The property was originally listed for $379,000. After back and forth with negotiations throughout the day, we agreed on a sales price of $330,000. To avoid paying PMI, I had to put down 20%. My down payment was $66,000. Ouch. PMI stands for Private Mortgage Insurance. I'm going to do a future in-depth video of how PMI works. For now, a quick breakdown of PMI is it's insurance for your lender. If you default on your mortgage, they don't lose a penny. You pay for PMI. Even if you're never late, you've never missed a payment, you made all your payments on time, you don't get any of that money back. It's like car insurance. In addition to that, you're stuck paying PMI until you pay down 20% of your mortgage, which is going to take years. How did I save the money for the down payment? As we already know, the average American does not have $1,000 in a savings account for an emergency, let alone $66,000. And the truth is, it took a lot. It took 2 years of saving, budgeting. It took 2 years of Christmas bonuses. It took 2 years of income tax returns. And to hand over all that money at the closing table absolutely hurt. I took a picture of that check just so I can remind myself of the dedication and the determination I had to save that much money. If you don't have that much money, there's still a few options you can do to purchase your second investment property. Option 1, move into the investment property. Banks love owner-occupied properties because they figure you're going to pay your mortgage payment instead of you becoming homeless. So if the bank allows it, you'll only be required to put down 15% instead of the 20%. So based on the property I purchased, I would have been able to save an additional $15,000. Before I discuss option number 2, I like to note I am a licensed financial professional. I am not your licensed financial professional. Please seek the advice of a licensed financial professional before making a financial decision. Option 2, borrow from your 401k. If your 401k allows it, you can borrow up to a certain amount of money and pay it back over a specified period of time. You could also do a withdrawal from your 401k where you don't have to pay money back. Unless this is the cash flow deal of the century, I strongly advise you don't do this because you're going to get hit with a 10% penalty and you're going to pay 33% in taxes. In addition to that, it's going to count as earned income, so when you file your taxes the following year, you're probably going to owe money. Option 3, try borrowing the money from a close relative or friend. In my particular story, a year prior, I was trying to buy a 2-family brownstone in Jersey City and I was short on cash. I asked my mom for the money, and when I did ask, I had a full printed out business plan, the exact date she would get her money back. In addition to that, I was already a landlord for almost 5 years and I had 0 vacancies, so I was a pretty safe bet. Hey, Jeff Bezos started Amazon by saving his money and borrowing $40,000 from his in-laws, and look where he's at today. The golden ticket. This is why I said in my previous video titled How I Made $343K on my first investment property is your first property needs to be a multi-family purchase. That way you can save money so you can buy additional property going forward. You only get to use this Willy Wonka ticket once, so make sure you use it wisely. After that, you're putting 20% down on every property going forward. If I had to go back in time, I would have purchased a 2 to 3 family in Brooklyn, which was still around $400,000 to $500,000 at the time, and it'd be worth over $1 million today. So like I said, use it wisely. Purchasing a single family home first is the death of some people who want to get into real estate, because now you're making a monthly payment for something that's not paying you. And depending on your salary and your saving skills, it's going to make it a lot harder. The great thing about this property, it was a turnkey property. The only thing I added at that particular time was an over-the-range microwave for each unit and a washer and dryer. I had both the units rented out at that time for $1,400 a month within my first week of ownership. Over the time of owning the property, I sold off all the standard white appliances and added stainless steel kitchen appliances for my tenants. In addition to that, I put granite countertops in both units. I financed this property on a 30-year mortgage at a great interest rate at the time of 3.875%, which I still have today. In addition to that, as of summer of 2019, the property is currently worth $450,000 and I have $190,000 in equity at this point in time. Now, before we get to the cash flow numbers of this video, hit that like button and subscribe. This will greatly help out my channel with the YouTube algorithm. In addition, hit the notification bell so you can see new content from me as soon as it's uploaded. I renovated a huge rec room located on the property and converted it into a studio. I hired contractors to take care of all the permits and build out the bathroom and the plumbing stuff, and I did the rest of the renovations myself. This tremendously cut down on costs. The mortgage payment is only $2,200 a month. After raising rents and adding the studio, the property is currently rent rolling $4,050 a month. After all expenses, I'm cash flowing $1,850 a month, and that's what you want to have to purchase additional properties going forward. One of the best things about this property is the previous owners, they did it as a flip. So everything was brand new. The central air units, the hot water heaters, and the furnaces. It's been almost 4 years and I've yet to maintenance any of these items once. Also, don't forget to follow me on Instagram. I post here daily, and as always, I want to thank everyone who took the time out to watch this video. Thanks.